What we're doing at GIFT is actually the first time it's happening in India. Okay? So what we're trying to do is create a business ecosystem that we haven't been kind of having in India from a non-rupee standpoint. And we call it the International Financial Services Center. So GIFT as a city has two parts, domestic SEZ. Within the SEZ, there's a little component called the IFSC. Right? To give you a sense of it, there are many global financial hubs around the world, like Dubai, Singapore, Mauritius, London, New York, Hong Kong, etc. But we have Mumbai being the so-called financial hub of India. But a global financial hub became a challenge where, in one of the statements Honorable Prime Minister Modi said, is that India doesn't participate to be a price setter or a trend setter in any of the global financial instruments, be it currencies, be it commodities, be it interest rates, or something. So zeroed in on, he'd like to see GIFT create that setup or ecosystem that allows India to become one of those key players in the global financial services market. So with that vision and that statement in 2017, we've got about 10 years to make that happen. So what we're doing now is we're working with many entities, stakeholders being government and businesses, etc. So with government, we had a few benefits of some regulation, business regulation change was announced in 2015. The competitive tax regime was announced in 2016. Then we had some company law dispensations announced in 2017. So every year we're kind of getting some benefits that are opening up the doors for people to come and set up businesses in India, and I'll explain what I mean by that. Along with that, in the union budget this year, in February 2018, the Honorable Finance Minister announced two things. One is a unified regulator for GIFT in GIFT to be established. So currently we have three regulators for financial markets: Reserve Bank of India, SEBI, and IRDA, the insurance regulator, right? So these three regulators regulate everything that happens in relation to financial services. So we engage with all three of them. But a lot of their focus is India and about how India relates to in a global sense. The regulator for GIFT will help GIFT understand how GIFT can equate with other global financial centers and see what regulatory change we need to bring in India so it brings India to a different level in the global landscape. Okay? And the other thing that was introduced this Feb was an exemption on short-term capital gains tax for transactions happening out of the GIFT IFSC. So what does that mean? You don't worry about the slide, too small a font, but let me take you through the picture. Right? So Reserve Bank of India came out with some FEMA guidelines, that's Foreign Exchange Management Act, relative to the IFSC in 2015. Similar to that, SEBI came out with some amended guidelines for the IFSC in 2015, and IRDA came up with the guidelines for IFSC in 2015. The rest of SEZ is still on the 2005 SEZ Act, so that continues to operate. So with those guideline changes came the tax dispensations that I talked about. So if you establish a business in GIFT IFSC, there is no long-term capital gains tax, there's no short-term taxes, no security tax, there's no dividend tax. The only applicable tax is a minimum alternative tax of 9%. Singapore is 10, just to give you an example. So we're creating a tax structure that now makes it attractive for global financial businesses to now establish in what we would call as a deemed foreign territory in GIFT or in India. You can put all of India aside and you can take that little piece of territory is equivalent to any other global financial territory or hub that you want to relate to or you may have heard about. On top of that, Government of Gujarat has added in one context for capital market operators saying no stamp duty for anybody operating out of the IFSC. So what does that mean for the three elements? So it means that we as GIFT IFSC, we've got MOUs with Astana, with Singapore, with Dubai, with many of the international financial centers, because creating that ecosystem of financial systems globally, financial hubs, is really important, and also making people aware of what we now have in GIFT, right, and in India. So what do we do out of that? So there are a few components to it. On the banking side, on the security side, or capital markets, insurance side, and other, and I'll take you through those. So we have 11 banks that are operating in the GIFT IFSC now. They're all Indian banks at the moment. Global multinational banks were not present or are not present in GIFT yet. because we were awaiting a little regulatory change from RBI on capital adequacy norms instead of a branch level at a parent level. That circular was issued about 3 weeks ago, right? So that's now going to see quite a lot of interest coming in from banks to establish themselves in the GIFT IFSC. Now, what can you do? So anything that you could have done out of a branch in London or a branch out of Dubai or Singapore, you can now do out of a branch in GIFT IFSC. All non-rupee transactions, so external commercial borrowing, trade finance, merger and acquisition funding, some of which have already happened. So these activities are already underway. So the benefit of that to India, about $12 billion of banking transactions have happened out of GIFT IFSC on banking alone so far. And this is the first time such transactions are happening. In addition to the benefit of a cost arbitrage of lower cost of operations being out of India, but also having a lot more book value management out of banks operating globally that can happen right in India right now. Some of the banks are actually looking at saying, how do I consolidate my international banking back office operations into the GIFT IFSC? Some have already begun, and some are currently thinking about it. And we're working with many of the financial institutions to see how they see the value out of it. On the insurance side, so there's about $20 billion worth of insurance transactions already signed out of the GIFT IFSC. So 12 plus 20, you're talking about 32 billion is the net add to India's services GDP so far. So the things that they can do as an insurer, so we have GIC Reinsurance, which is the 12th largest reinsurer in the world, and we have New India Assurance and a whole bunch of brokers. So what they end up doing is they can finance international insurance requirements or underwrite, not finance, underwrite international insurance transactions for SEZ within the GIFT SEZ, SEZ to SEZ, SEZ to overseas. Or any bit of those transactions can be done right in the backyard of GIFT IFSC or Ahmedabad, which is GIFT IFSC. In addition, in the capital markets, we have two functional stock exchanges. Well, I say stock, well, we have two functional exchanges, stock is wrong. Now, in these two functional exchanges, one is the Bombay Stock Exchange India INX, second is the NSE IFSC. Now, the BSE India INX was inaugurated January 17, 1 year ago, a little over 1.5 years ago. First day of trading volume, $1 million, 10 products being traded. Last month, that exchange did over $1 billion a day, which is 7,000 crores a day of non-rupee trading happening right in the backyard of Ahmedabad or in GIFT IFSC. What we do is create ecosystems. So the exchange got set up and operational, and there are now 140 products being traded. Along with that, there came 100 brokers that have said, I'll be participating in the exchanges. 39 of those brokers are operational already, and others are in various stages of being operational. Now, the scale and size of these exchanges have got some of the international exchanges quite interested in what they're doing, and they want to have connectivity, which SEBI has now allowed recently, of connecting that exchange with the exchanges in the GIFT IFSC. So a broker sitting in that exchange or an institutional investor can actually trade on the exchange here in the IFSC and vice versa. So there are about 4 exchanges we're having discussions with right now where we can bring that in. These exchanges are operating 22 hours a day, right? So it's actually almost a full-time element of it. Some, Yes Bank had rolled out their medium-term note for $1 billion medium-term note, launched 600 billion of that over 3 exchanges, London, Singapore, and GIFT itself. And the whole trading of that instrument is happening globally. So who are the permitted entities that can come in? So you have people like the FPIs, the foreign portfolio investors, EFIs, which is the eligible foreign investors. Domestic institutional investors can now set up base in the GIFT IFSC. And we're happy to help people go through the process of figuring out what bits they can bring in along with the various brokers. What can you trade in the exchanges? You can actually sit in the exchange as a participant, and you can trade on a Microsoft or an Alphabet future sitting right out of GIFT IFSC today. So there's about 15 global stocks and 109 Indian stocks that we can actually trade out of here, in addition to commodities, in addition to other financial instruments and currencies, etc. So all of this trading is happening in the backyard, and a lot of people actually don't know what that means. All of this, what does it lead to? It leads to a platform that actually says there's a lot of business opportunities that can now be attractive. Anybody that was thinking of setting up in Mauritius or Singapore or Dubai or London, but also wanting to take advantage of the India growth story, now have a platform called the GIFT IFSC where they can come in. Some 50 clauses of the Companies Act have been waived for businesses establishing themselves in the IFSC. Things like number of board meetings in a year, number of women directors, and the requirements and those mandates have been waived to make it easier to do business, easier to set up in India, and not get bogged down with too much of regulatory control, but also maintain the right balance. And I think that's where the real focus is. So today, there's a huge interest coming from alternate investment funds. Global AIFs are looking at coming to establish, bring global funds into GIFT IFSC, use that to fund internationally, as well as look at funding opportunities domestically to how they'd like to kind of engage and grow domestically itself. Mutual funds and a whole bunch of other stuff. One key element that we introduced middle of last year was we also brought in the Singapore International Arbitration Center. So they have a hearing center in GIFT IFSC itself. So as a business, if you do international business, you obviously may or may not have disputes. But what we found was Singapore International Arbitration Center, 30% of the volume of arbitrations were with Indian corporates having some form of dispute internationally. So we brought that whole ecosystem also back into GIFT. So 2 exchanges, the 100 brokers, law and accounting firms also participating, and an arbitration center. It just creates the whole ecosystem so that the business doesn't have to go through expensive routes of trying to ensure they have the right conduct on business. The various other discussions we're having around the free trade warehouse, gold spot exchange, and a few other things really. The thing we don't have is cryptocurrencies, and that's okay over time as things evolve. We'll see where that goes. But where we end up at GIFT is progressing really fast. It's really inviting and creating that platform where it makes sense for businesses to come in, make it easy for them to establish and operate and grow and take advantage of not just the India growth story, but take advantage of a presence in India where they can manage their operations at a regional sense